welcome to my channel. You're watching Forex, and in this video I'm gonna tell you a little bit about my trades. If you watched the previous video, I promise you to show in my next video why I was placing the trades in those orders in those particular areas. Let's say it that way. But first, of course, again, I want to warn you that Forex is a risky business, and if you are not sure, never do trade, and you always have to know the risks, and always use money management, and ask advice from the specialists, from the financial advisors, before you decide to do any trading. And so it's all at your own risk if you decide to go and trade or not. So if you don't feel that way, so if you agree with everything, so you can continue. If you not agree, you just can change the channel. So so in this video, okay, let's just start with euro dollar. You know, I was trading few pairs, and it's the channel is also, which is a trend channel, I call, or ascending channel. So all the same system. You understand that it's all based on breaking the levels. So the trades are based on that. And usually I do use trend and trend levels because I day trading, and I do go for smaller movements and for little profits. But I always, of course, I draw the big. I always go through the big time frames to find the trend. It's the most important thing. Before you starting to trade, you need to, before you decide to go and place any orders, you need to know what is going on in the market to find out if it's uptrend, downtrend, or it's a consolidation. So it's kind of, that's simple rules. And of course, so it depends on how big is the trend. I can always trade inside the trend, or waiting for the market breaking the levels. This is exactly what happened on the 15th of October. There was some news, and not those important news like I would usually trade with my news system, but they were news which I was expecting they should move the market, and that's why I placed the trades. But I had to place them quite fast. That's why I didn't have time to make videos before. So in euro dollar, we look at you can see that's the main levels, and it's an uptrend. So you understand. If you look like previously, I'm not going to go backwards far on monthly charts and other charts. I will make in other videos. I will make again an analysis of the euro dollar and maybe other pairs to see what's happening on the market, what I think and what I see. But right now we're just looking a little bit behind. You can see that market was moving mostly kind of like consolidation, let's say. It's 1 hour chart, so you can see it's like just moving in kind of channel, and then it started to go up and up and up, so it's uptrend to me. And so that's why I draw these two levels, and so I used this top, and also I used this top before the 15th. That's on the 15th, before the news happened. It's around this area, so this is what I draw. So I use two main tops because the market get twice to that level, to the top. And the bottom one, I used these bottoms of the candles, and that's how I draw my bottom line. So before that happened, there was that line here, and so that's it. These were two main levels which I was waiting to break, for the market to break one of them. I've only placed the horizontal lines placed here. It's just because it was easier for me, because it was happening fast. I came in on the market and I had only a little bit time to put my trades, because I wanted to trade few pairs, and the trades happened quite fast. So that's I just use this horizontal. Otherwise I would place my trend lines with my little expert, but I use those ones. It's just easier. And you know that I put like 20 pips up and 20 pips down, and that's all. That's how I did it. That's how I thought. Of course, I thought that the market would go down because, first of all, I saw there's like lots of action around here, that the market is around this level is more than here. It's kind of couldn't reach the top levels. It's like only two touch, like three touch ups. And here it's like one touch, like 2, 3, 4, 5, few times it touched the bottom line. So that's why kind of mine was the market went up, and it should start to correct itself to go down. So so I actually placed the top order is just in case. I know that this news usually don't move market like 200 pips or something, because look at the distance here is like 70 pips. So you know it's 736, but you know it's 73 pips. So that's why, of course, I thought it will go down. That's why, you know, I had two trades. At first, when the market went down, and I had one trade here, and then it's a little bit more down around here. So this how I did, because the market was going down, and I decided to put to collect a little bit more profit. So, you can see that afterwards the market moved backwards, and I went with the profit, but the return was the market return. And then you can see like the importance of this level, just trying to get you to that point. You can see how important level that the market returned to the level, didn't break it, didn't go back into the channel, so it continues down. If you trading, or you will be trading, or if I would have been trading for few days, not would have been, you know that I like to close it at the end of the day, or close wherever I'm in trade, to close it earlier. I don't like to go next day or a few days, unless it's, I don't know, something else, like triangle or anything I see. But usually I just, you know, day trading. And so if I would be trading a few days, so you can see, if I would just stay in the trade, so the market moved, it's not moving a lot, because you know that on Thursday there will be ECB, central bank rate decision. And of course the whole attention around this right now, so you can see the market doesn't move too much. So of course on Thursday I will be watching the situation and see should I go in a trade or not. So we will see, but you can see right now it's kind of moves really like in a channel, so mostly in the same price range, let's say. And but if for example it stay, so I had something like from that level, so slightly a little bit less, like so it's 20 pips. From that level would have been only 10 pips. So if you would see, I was around here somewhere, so I went into the trade, and so around these levels. But okay, let's just do from, let's say from that level, how more it moved. So I come out around here, my trade stopped right here somewhere, and the market still moved. You can see it moved now like what, 60, about like what, 70 pips it moved from that. So if trading few days, better profit, riskier but better profit. And I was thinking actually to put the second trade. I did actually trade on Monday, and I'll show you the next video where it will be my this week trading, because this is the previous week. So I did trade a little bit on Monday. I had a little profit, but because because there is important news going to be on Thursday, that's why I can be a bit more attentive to it. So not, because market might not move enough before the trade, before the major news, so it might not be good moves. So that's why I didn't trade like today, and so it's like Wednesday today, Wednesday, Tuesday I didn't trade, but I had a little trade around here. And so that's all. But again, if I would have been trading for a few days, of course my stop loss, so I can't like do big trades because not big account, yeah? So if you have big account, you know money management, so you understand that your stop loss would have been, of course, somewhere over this level, because this is too important, it's as important channel it was. And of course, if you like somewhere, you put your stop loss higher than the channel line, yeah? So this is because you know if market moves and might go against you, it's still, if it didn't break like the next level, that means you are still don't panic, it's still okay. But if it would break the level, that's where you have to think about and analyze and think what to do next. This is where would you be stopped, around here. And the other way around, of course, if you like put your orders like here somewhere you would buy, then your stop loss would have been around here from that level. So from that level. So that's all. So of course when I closed it here and my stop loss was much nearer, it would have, when it come back, it's by trailing stop, it closed me. So that's how with the euro, we found what I did. So as I told you, let's go to the like daily one. You can see I had like done one of these levels, and the main picture was like it's going down. But you can see this area, and the market is going up. So pound was uptrend. That's why I was telling you I was worried because the pound was in an uptrend, and here you can see now it's like a little consolidation again before next move, and so that's what it was here. When I go back, I'm showing you in 1 hour. I mean, I placed it like on 15 minutes. I looked at it. Well, we can go to 15 minutes. It just want to be a little bit too much, I think. Right here, yeah. So for pound, really, I used my normal horizontal channel, but the strategy of it, yeah, but not the same rules, like not the distance. Of course, it was quite big distance inside, but you can see the same kind of technique. So I saw the market was moving up here, and then I started to create this channel, which is quite big, but I had like the top here, then it was top here, then some movements around this area, and so it's about like 40 pips channel. So you can see here a little bit and here a little bit, and so that's how I put these levels. That's how I was thinking at that moment. But as you can see, again, the market moved, the pound moved even from those levels. It's my trade was like 20 pips, take me into the so 20 pips I was in the trade, sold, and I needed another 20 pips to close half of my positions. And you can see it didn't reach. It's kind of hardly, but you can say yes, maybe it was about 40 pips I needed only really to close half positions, and it's slightly, maybe it's even got to it, but because of the spread, you know, that's why I like euro dollar more, because the less spread and a bit better movements on like American news kind of. But on euro pound, on dollar pound, you can see pound dollar, you can see it didn't move enough, so there wasn't enough movements, obviously, and that's why I decided to come out. But 10 pips would have been okay if I would go for my usual 10 pips. So here you see, if I would have like leave it, you see how important really this channel was, like levels. Let's just go back to 1 hour, it would be better to see that actually if I would have leave again, right, for a few days, if I would leave, then the stop loss, I wouldn't use the same stop loss as I had. The stop loss would have been above that level, like somewhere, I don't know, but you see, because it's longer trades, longer days, it would be probably about 30 pips or maybe 40 pips or something, because when you trade the bigger charts you trade, the longer days you trade, the higher your stop loss should be. That's why the more risky it is, but also the reward could be higher. But as I say, I prefer smaller trades, more small profitable trades, than just to wait for one big move and have more risk. I don't know, everybody's prefer whatever you prefer. Everybody have their own choices. This is my choice. And if I would leave it for a few days, as you can see, just like I was saying in the previous video, I wasn't sure, there wasn't much movement, and it was very slow, and you can see market actually returned back into this channel. It come out again, out of it a bit, and returned back. You can see all of these days, and up until today, it's kind of moving around the level from my daily chart, and still around this kind of the horizontal chart. It's actually like a consolidation, as I'm saying. So of course, what I think will be going to happen next is going to be movement. And so now I'm like even talking a little bit ahead. If you would see it for Fibonacci lines, that market pound is stopped around the 23 and 0 level. So it's kind of stuck and it can't break either of it. So obviously now I'm going to watch it, because tomorrow is going to be ECB, central bank rate decision, and hopefully the market will move better this time. So I'm going to see what's going to happen, of course, on the market, and of course this time I will be placing the orders again. But how I'm going to place the orders right now, I don't know yet, because I need to see another day tomorrow what's going to happen before the news. So possibly it would be from these levels, from that level and that level, possibly, or it all depends, or I'm going to use my usual news trading system, and you know that system. So maybe I will put a few orders again, like I did for euro last time. So it's all going to be, I have to see what's going to happen tomorrow. Right now, this is what I'm thinking of. And so euro dollar, Australian dollar, that's the same. You can see that my channel, the trend, so it's going up. So it actually was going up before, and then it had a consolidation, not correction, and then it's started to go up. But you can see it's kind of like we have level here, so that's why I kind of have this horizontal lines. They are also the horizontal lines. I just draw them again, so easier for me. But it would have been trend lines. This line, that line, and this line are important ones for that time. The only what I would usually do in this what I did like in the Canadian dollar, is that I would really personally would go for this, like this. You can see that channel. So I would use that little area to draw the line. The only way why I didn't do this when I was thinking about it is because it's Australian dollar, and it's the other time zone. So of course I thought might not be going to be as active as like Canadian. I thought because Canadian is in the same time zone, and so kind of in the same time zone with New York, right? So that's why I thought the Canadian would do better, but Australians, I still decided to go for those levels, for the main trend levels, not for, let's draw this one, not for this one. This is the only one thought was because it was the Australian. I didn't think it's going to be enough movement, so I thought from that level it might reach this. So it's about 30 pips, so I thought maybe I should have put like my usual trades, like 10 pips, half profit, and I should have done this, but I decided it's not going to be much movement. It still worked well for me from that level, so I put also from that level it's end up, because it's a little bit higher, it's the same as the previous one, it's end up that from the main level it's only 10 pips down, and then it took me in trade. Because it's 20 pips from the horizontal line, so 20 pips it took me in trade around here. So basically, if I would put it from the trend line, it would have been 10 pips from trend line. I felt it would be a small movement or something, and that's how I felt about it. But really, I should have put from that one. And if it would have been euro dollar, I would definitely do it that way. But doesn't matter, as you can see again how important this level. It was broken. And then the market returned again. Remember, a few days trading would have been, the stop loss would have been somewhere, so it would have been for a few days trading more risky, more rewarding, staying in the trade. And you can see the extra from like come out from here somewhere, but staying in trade, extra up to today, it's now extra 58 pips, 50 pips even. So that's just the trend lines. The trend channels, you see how important they are. When they do break, you can make a good profit on it. And so Canadian dollar, the one which the same as the pound, I come out with just a little bit of profit, and the same, you can see the trend, and I don't know if you can go. So that's the trend was at the time. Yep, the before was going up, and then that was downtrend movement. And so going back to now, just again easier to see, better picture what happened. So the market was moving down for Canadian dollar, and you see here I draw it like this. Here I draw it like that. I think it's because I felt there was a bit more space around here. Yes, more like about 60 pips. More than the Australian one, and of course I thought the Canadian is on the same time zone, and I was hoping that it will move enough, that will be a good movement for the dollar. And also, of course, I knew that there are some news for Canadian dollar will happening, so I all had this all in mind, and I was hoping that this American news will give it a push, and that the market will move. So I place the trades, but here I put the trend line. So I put from that level and from that level, hoping that the market will move at least to this level, and would break it at one point, not maybe the same day. That's why if I would think it would do the same day, I would have put trade from here, but because it was quite far away, I was placing it from that level. And so you can see once again how this technique works. The market moved, and it just a little bit wasn't enough. Again, like if I would go just for my usual 10 pips, you can see it moved about 40 pips. it did, but because of the spread, it's probably was bigger spread again, because Australian, Canadian pound, yes, they can have bigger spreads than euro dollar. So you can see that's why if it would have been euro dollar, I would have closed in my 20 pips. But even if I put 10 pips, I would have made it. But somehow I decided everywhere to put 20 pips. So you can see that's how it worked, and obviously again what it did, it moved down a bit in here. You can see it moved to the level, didn't break it, and actually it's broke at one point. That's what you can see that's what I was talking about. When I was making video, I was hoping it would reach this level, but it reached lower, a little bit lower, and of course it's broke it, and now you can see there is some news today also, obviously not in Canadian dollar favor, and it's like it's moved now like 190 pips. So it was a good opportunity to use that technique and to make a good profit again. As you can see, it didn't break, so of course once again trading for a few days, longer trades, not a day trading, then the stops would have been higher. Here would be also, from that point, like the stop would have been here somewhere and here, and then the market returned here, wouldn't touch the stop because it would have been far away from that level, and when it returned it could have been very good profit. So that's how I use the trend channel levels. That's how I use this. This is my thoughts. But of course it's all there are not like specific rules. You can see the basic rules. It all works the same on the breaking the levels, and then you just everybody have to decide and make a decision for themselves. Again, how big the stop. You know the main rules, like the stop should be away from the main levels of the channel, and doesn't matter if it's a horizontal channel, if it's uptrend, downtrend, the stops should be away from the main channel if you're going to trade for longer time frames. So that's like the main rules, but which levels you have to decide yourself. You have to of course watch it and see, of course use monthly charts. Well, that's how I would use it. Like I will show you in next videos the analysis of the pairs on the monthly chart. We'll look at again what's happening right now, and so it's all kind of the same technique, and depends on different situations, what the news going to happen, what's happening on the market, or what's happening in the country, and specific currency, and then you make decisions like to go out from the trade, stay in the trade, take risks, and what to do. But the technique is the same. So I hope you understand these things that I was trying to say, and it was useful. If you realize it, don't forget to subscribe, and bye everyone.